Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. So with that being said, let's just dive in. So first and foremost, just want to ask, how's everybody's day going? Drop down in the comments how you guys are doing. What do you think about the current market? Yesterday, if you guys did check out my XRP video, you probably expected us to have a 180 turnaround, as everybody on, of course, crypto Twitter was getting extremely bullish. I told you guys that we were most likely going to hit 24.2K, and we hit $24,196. I know on a few exchanges we actually went to about like 24,300, but it's all good. We were expecting that nice little run up, and then we had this nice little, basically retest of the lows at 22.7K. I do think that we could come down slightly a little bit more, but a lot of people have been asking me and wondering, like, hey, do you think that the bottom is in? Do you think that, we're going to the moon here now? What's going on? So, first and foremost, whenever I really kind of look at the market, I don't really care for the idea of, like, people on Twitter getting extremely bullish. I don't really care too much about, like, in-depth technical analysis. I actually look at just support and demand ranges. And also, like, resistance is key. Like, for me, calling 24.2K before we have a nice little pullback was pretty easy, just because it was the moving averages combined with resistance. So it was either one, we reject off of that level, or two, we break through it and continue upward to like 26K. But, obviously, yes, we rejected off of it. It was a perfect trade opportunity, but of course I did not take it. It is what it is. But, I was really kind of looking at this because everybody was extremely bullish. We were seeing altcoins up like 50+%. And, even stocks opened a little bit green. Everybody was, saying like, this is it. Everything is looking good. Of course, the dollar was getting shared around, saying like the dollar is doing its 180 move, or it's collapsing. And, every single time that the entire market is getting bullish, like I've seen a whole bunch of big influencers coming out saying like Bitcoin's going here, Bitcoin's going there. That's the best time to deleverage yourself. So with that being said, do I believe that the bottom is in? Do I believe that, we already seen it? I believe that we are very close to, if not we already have seen the bottom. But of course, it doesn't mean that you have to FOMO in every single time that you see green. Like, I would say, wait to see what Bitcoin does from here, because we do need it to stabilize before even buying. And also, I just want to say, like, we're going to be talking about a few events to look forward to. But first, we have to talk about the SEC. We do see this from Eleanor Terrett from Fox Business. When I asked Representative Sherman why he thinks XRP is a security, he told me, for the reasons set forth in the SEC's position, and went on to explain that XRP investors relied on Ripple efforts to bump up the price. He then said the proof that he's right stems from the crypto exchanges delisting XRP because they all concluded that it was a security too. When I addressed the fact that the exchanges faced a lack of clear guidance from the SEC, he said everybody knew, they were skating on thin ice. They decided to skate on thin ice to make money. The problem here is the fact that these exchanges delisted XRP to save them, like, themselves. You got to remember that once they came out with the XRP lawsuit, like, these exchanges didn't know what was happening. These exchanges didn't understand anything around this SEC case. Not only that, but these exchanges also have a ton of other funds that they are, or assets that they are listing on their exchange that they are, usually selling. So to them, it's like, all right, well, we are already making money on all of these other assets. We could afford to delist XRP and really kind of save us the legality process, because now we already see the SEC trying to go after these exchanges, during these times. So they will most likely utilize the idea of like every single asset besides Bitcoin and possibly even Ethereum are securities just to attack these exchanges, and they will have support from people like, of course, Sherman. And by the way, this is from Jeremy Hogan. He's basically saying, he's talking about the SEC and the possible violation of court rules. We do see our scoop via Eleanor Terrett. House FSC Dems member Brad Sherman tells Fox Business he believes SEC Gov will easily win its case against Ripple over the legality of its unregistered sales of XRP, and has been in contact with Gary Gensler to expand the case. And we do see down here, ask Mr. Sherman how he arrived at his conclusion, as both parties are under court order not to disclose evidence to third parties such as him. Did the SEC violate court rules and provide him the evidence in the case, or is he making recommendations to Gensler without basis? And I would say, okay, now I'm gonna say something. This might be a little bit of a mistake, but The reason why we are seeing individuals like this Sherman talking about, the SEC case and XRP is this, XRP is that, is this. So shout out to Kyle McLean on Twitter. If you guys don't follow him, definitely go check him out. But we do see here, politicians should wear jerseys covered in logos of their biggest campaign donors. That way, when someone like Brad Sherman reads a speech and tries to jam up Ripple to protect legacy banks, at least we'll know who they're representing. And we, of course, see BlackRock, Discover, Capital One, and Charles Schwab here. And it is funny, right? Like, it's laughable that we're basically at this point in time where this technology is being thrown out the door because they want to protect the banks. They want to protect the US dollar. They want to protect the bankers. This is a major concern. And it's honestly a major problem as well that we have been seeing. But I do completely agree with this statement. Like, obviously, it is slightly a joke. But the SEC, I'm going to say something, and it's going to be my opinion. But let me know what you guys think about this down in the comments below. To me, the SEC is in the banks are in their pocket, right? The banks are paying them at some point in time to create FUD around like crypto. I just don't see how it's not, a concern to people that they're seeing like the SEC have a full-on 100% agenda and push media agenda, against crypto. Like, why are they hating crypto so bad? Like, what is going on here behind the scenes? And we have seen a ton of evidence, by the way, around some of the largest names in the financial sector that have, at some point in time, either worked with the high chairmen of, the SEC or even just elites around the system. To me, this would collapse the system if we had something like XRP ushered in. It would take out the middlemen behind the monopoly of the financial sector that we run on today. So obviously, yes, they are going to attack crypto. They are going to go after crypto. And it's not just XRP, by the way. I seen a lot of people, commenting on my last XRP video saying, why are like the XRP like fanboys crying about this? Who cares about XRP? It's not just about XRP. This is about all of crypto. Remember that. And also, around the market sentiment, I did say sentiment in this market is 50-50 currently. I'd like to say that I believe we have seen our bottom or close to it. The Tesla news combined with the upcoming GDP report and FOMC meeting could be a catalyst to have volatile swings. I will have cash on the sidelines to buy in case. And yes, just a warning for you guys, like we've seen a major announcement from Tesla. Basically, they have sold like 75% of their Bitcoin, worth about $936 million. Do I think that this is a concern? Not exactly, but I will say this. It could possibly have the market kind of have a volatile swing. Remember, when we really kind of step back and look at this market, there will be FUD that is completely like idiotic to even follow. Like, I think that this is just really kind of nothing. It's $936 million. Remember, like the Bitcoin market cap is, $437 billion. But this market will play into like the stupidity. Everyone will try to make a basis point on why they are selling, why they are buying. To me, it just does not matter. Again, like I don't like to follow the news like this because it just kind of makes you emotional and say like, all right, well, they revealed that they sold 75% of their Bitcoin. Let me go sell right now because that would be the right thing to do, right? Like these individuals are selling near the bottom. It's a major issue, and I know that a lot of people are saying like we haven't seen our bottom. We're gonna see 10K, 3K. I don't really care what we see, to be completely honest with you guys. Like during March of 2020, we heard a lot of calls about like 3,000, 1,000, even sub 1,000 prices for Bitcoin. And guess what? We never seen them. And I do believe that we will see that, happen again because, again, history repeats itself. And a lot of individuals are extremely emotional around this market. Now, talking about the FUD around this space. So first off, we do see our BitInfo chart shows that the previous Bitcoin third richest address, transferred the remaining 29,235 Bitcoin to Coinbase today. The address has no Bitcoin holdings in the past, 3 days. It transferred 132, almost 133,000 Bitcoin to Coinbase. Now, again, a lot of people will look at this and instantly go sell because they think that like the market's going to drop drastically. And in fact, we actually do see down here, this is FUD. This one is just an internal transfer to, of course, this wallet ID, which might be a cold wallet or custodian wallet, highly likely owned by Gemini. What's obvious is that it's not a user deposit to exchange hot wallets for selling Bitcoin, not, at all. And of course, you guys do see like individuals like Crypto Whale, creating a ton of FUD around this. Like, this is a massive amount of, Bitcoin. It's over 361 million, almost 362 million. And we do see like sub 10K will happen. The bull trap is exit liquidity for whales. Don't say I didn't warn you. Like, a lot of this is just all stupidity to play into the fear. I would say, like I said, if we do have another retest of the bottom, or if we do come down to test like a nice low, I do expect like around like the 11 to 14K area to hold strongly, and we might actually hold like the 300 weekly moving average, which would be around like 16.7K. So to me, like it just does not make sense to pay attention to the FUD. Please don't be emotional during these times. But also we did see here just in Minecraft announces a ban on NFTs, which again is going to play into NFTs, going down in price. The market is going to have like a systemic shock to it. Like, all of this is just playing into major fear. Now, talking about real fear. So I actually want to talk to you guys about something that I have been seeing. So first off, here we have breaking news. Tanks are being put out on the streets in China to protect the banks. This is because the Henan branch of the Bank of China declaring that people's savings in their branch are now investment products and can't be withdrawn. And of course, let me mute this just so that you guys don't have to hear it. But here you guys have a massive amount of tanks being deployed over there because, of course, banks are freezing individuals' assets, utilizing them as investment products. And does this sound familiar to, I know that I'm pretty young. I wasn't like extremely old around like the 2008 era. Like, I'm going to be completely honest with you guys. I was around like 10 years old during 2008. But again, I was actually still paying attention to finance, as funny as it is, when I was that old. I know that a lot of people were playing video games and stuff like that at 10 years old, but I was actually very interested in finance, in business. I've always been. And I actually remember during this time that we did see a ton of banks actually freezing individuals' assets. Funny enough, we actually go back to 2008, and we do see here how the 2008 financial crisis, affected the banking sector. Over the short term, the financial crisis of 2008 affected the banking sector by causing banks to lose money on mortgage defaults, interbank lending to freeze, and credit to consumers, and also businesses to dry up. For much longer term, the financial crisis impacted banking by spawning new regulatory actions internationally through Basel III, and in the United States through the Dodd-Frank Wall Street Reform and Consumer Protection Act. And of course, here are the few takeaways. Measures taken after the financial crisis were designed to both protect banks and their members. Some of the major effects on banks were centered on debt management, allowance, and available funds on hand. And of course, the Dodd-Frank Act was passed in 2010, ensuring that banks are held to a high standard of liquidity and available assets in order to mitigate risk. Some financial experts believe that the act to be too stringent and have since attempted to repeal it. And the funny thing about this, right, is that we're seeing a liquidity crisis happen no matter what. For example, like this, I know that this might not seem like anything, like you might actually call this FUD as well, but the issue that we are seeing here, basically having individual savings frozen is a direct conflict due to what we have been seeing in the real estate era over in China. Again, remember, like up here is mortgage defaults. Like this is what happened during that time. It was a liquidity crisis because, of course, banks were, losing money on the mortgages. And we're actually seeing here China's home buyers are running out of patience with the real estate slump. Last week, a spike in reported numbers of home buyers halting mortgage payments prompted many banks to announce their low exposure to such loans. Across banks covered by Goldman Sachs, average exposure to property, including mortgages, was just 17%. If more home buyers refuse to pay their mortgages, the poor sentiment would reduce demand and theoretically prices in a vicious cycle. It is critical for policymakers to restore confidence in the market quickly and to circuit break a potential negative feedback loop. Honestly, with combining inflation and looking at the economic structure around not only the US but globally, I would say that we are pretty much nearing another 2008 financial crisis. Again, we go over to this. China banks told to bail out property developers as mortgage boycotts threaten economy. Intervention comes as thousands of home buyers refuse to make mortgage payments in deepening property sector crisis. Remember, we just talked about how this is a $55 trillion asset class by itself. And these are individuals that are not, making payments on a monthly basis. We do see down here GF Securities in Guangdong, for example, said that the amount could be $2 trillion yuan. which is $300 billion. This is the value of the mortgages involved amounts to, $2 billion, $300 million, if you will, according to data from the banks on Friday. Sorry. But some analysts think the real figure is much higher, and it probably is. I would say like this is something that we should be watching for, because this is exactly what, really kind of lit the flame for the 2008 financial crisis. I think that anybody who is in crypto right now should be studying, economics around like the 2008 financial crisis, because we are seeing pretty much all the warning signs and red flags around that. And I do think that it really kind of starts with the Fed and the central banks, really kind of trying to downplay inflation, downplay like the current financial economic viewpoints, but also they are pointing fingers at each other. We've seen the Fed blaming central banks, we've seen the central banks blaming the Fed, and we even seen the president of the United States blaming consumers like me and you for inflation rates. When this is happening, things are getting a little bit, rough. Now, a lot of you have always asked me, how do you prepare to, basically, get out of the 2008 crisis, with your shirt on? You didn't lose your shirt, and now you are actually set to financially, invest and buy a ton of low-value assets to not only create more, passive income, but also get rich. Well, it's simple, right? One, try to get rid of as much debt as possible. I see a lot of people say, like, why would you want to get rid of debt during a recession? Because debt is an absolute killer during a recession. Remember, credit unions will push inflation, or inflation, interest rates higher because of course, like the inflation on those payments, but also they don't have as much, exposure to liquidity. So they don't actually have quite a bit of liquidity to back their credit, similar to like an exchange, if you will. So again, interest rates will go massively skyrocketing, especially even around like mortgages during this time. So try to like pay off as much debt as possible. Also, I always say, do not overspend. Do not, pay out like money on things that you don't need. Always buy like only necessities, and save as much money on the sidelines as possible to not only buy, low value like assets, like even real estate, for an example. Like the real estate market is going to most likely collapse, similar to what is happening over in China, and that's going to be the time where you want to actually buy real estate, because again, like the run up in real estate just recently was insane, but it's going to take time for everything to actually fully bottom out. But I know that a lot of people have been asking me, like, what do you think is going to happen with crypto? To me personally, I think that we have a major run-up in crypto right before, the recession actually does hit. Remember, the GDP report that I did announce on Twitter is coming out at the end of this month. We'll most likely see the after effects of that, report, hit by around like 2023. 2 negative quarters in a row does confirm a recession is here. Again, you won't hear about it until about 2023. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As does up that you all have a beautiful day or beautiful night wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.